Alright, so MPW, Medical Properties Trust, reported earnings earlier this week. And we were expecting to hear something regarding Steward. We got some information, but we did not see a finalized deal yet. So recovery is taking a bit of time. This is a new stock in my portfolio, one that's part of the 100k dividend portfolio challenge, where I just try to build a 100k dividend portfolio to see how quickly I can do it if I have to do it again. And this was a stock I looked at after these terrific discounts that we've been seeing. So when it was down at 3 something, I started loading up a lot, trying to get to 10k shares in this before I will stop buying at about 7k now. So we'll buy a little bit more, reinvest dividends, take a little bit out of the paycheck, just get to those 10k shares and then ride this stock. I think it's a stock that has been very unfairly valued by the market. I think that it has hit some temporary troubles with this Steward situation, and that there's a lot of potential for me by taking risk to get some nice returns. When I first started buying the majority of shares, yield was at 15%. Today the yield is 12.62 with current dividends of 15 cents every quarter, and that's down from about 30 cents before there was a dividend cut. And it can be very interesting to think about, is it likely that they will do another dividend cut? Well, in my opinion, I don't think they will cut dividend further. We saw normalized funds from operations at 24 cents, so that's good enough to be able to sustain dividend. It doesn't make it very unsafe. We also see some of the debts that the company have. If we look at the supplementals to the earnings, if we look at the appendix, so to say, from the earnings presentation, then we see some variable here and we see some fixed. A majority in this case is is fixed. And we saw the credit rating of BB- for this company as well. So they can be very happy with current rates, and we see that a lot of them have a long time left until maturity. Just take a look at these 2026 notes, fixed less than a percentage in rate. And then we see the variables being the expensive ones, of course, but the weighted average rate here is slightly above 4%. And that's a decent cost of capital coming from the debt side, especially in this environment that we're in. If you're unlucky and you have a fixed variable mortgage, you might get 7% in today's market. And here we're seeing a company having commercial properties having a weighted average rate here of just above 4%. So fantastic results. We can see here a breakdown as well in terms of fixed versus variable for the debt, but indeed these will need to be renegotiated coming up, and hopefully we've seen interest rates being cut by then so that the renegotiation will happen on more favorable terms. But plenty of time to fix this Steward situation. And we saw a loan once again from the company to make sure that they're able to continue operations, but we also saw a Chapter 11 bankruptcy from Steward earlier in the week. The stock price dropped very quickly and then recovered shortly after. I think that this is a great tactic to make the deal happen quicker, in my opinion. If a company is deemed unable to continue to operate, then it can be bought up by a competitor without much scrutiny on monopoly positions and all that kind of jazz that might happen from government intervention in certain deals. We've seen plenty of mergers come under scrutiny, being delayed a very long time. Just take a look at the Microsoft acquisition of Blizzard as an example in that case. This is of course on a much smaller scale. However, we always see government intervention and these types of tricks that can make a deal come through smoother, that can facilitate, is something that's worthwhile having in the back of your mind that, all right, this is potentially a way to get it done quicker, and I think the market realized that as well with the swift recovery. Although that's not super great in terms of the equity that MPW has in Steward, but a tenant that's paying rent again, a new tenant, and some greater funds from operations coming in, more secure dividend, and hopefully one day, once these troubles are behind and shareholders can take a deep breath of relief, we see a dividend coming back up, and then it will be an absolutely amazing yield for those who bought in early and took a big risk. Of course, with investments it can always go the other way, but this is definitely an exciting one in my opinion. I will keep my eye on it, keep building that position up until 10k shares, and then I will just stop buying, and hopefully I get to enjoy a nice dividend payment for a long time, and just being able to use it to cover bills then, and not really use it to reinvest. It's important to learn to spend the money coming from investments and not just stacking forever. That's a skill as well, believe it or not. Seen plenty of older gentlemen in my wealth management days that were around the 80s and had way too many millions in their accounts. That's not going to be me. Alright, enough covering MPW here. Super interesting company. Very high yield right now, very high risk. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.